Hello and welcome to Dealroom Exchange podcast. My name is Andrii Degeler. I am the journalist in residence at Dealroom. Today with me is Henrik from Gilion. Henrik, could you please talk a little bit just about yourself, to introduce yourself and explain why, what brought you here at Slush?
Right. Well, thank you for having me. So, yeah, my name is Henrik. I'm one of the co-founders of Gilion, and I'm focusing on building the platform team, so the whole technology and the product that we're building. And what brought me to Slush? Well, I think Slush is the biggest event in Europe. So I rarely actually go to many events because I don't have simply the time, because we're in constant crunch mode at the office. But you have to go out every now and then to meet with the ecosystem and talk about what you do.
Yeah,
because if you're building great things and no one knows about it, then it doesn't matter much. So I like to pick some of the best events, and I think Slush is one of them.
Right. Great. And so what is Gilion then? So like, what does it mean that you work there? What does it mean that you're the head of platform team? What do you do?
Yeah. So we created Gilion with the idea that we could leverage data that exists about all companies inside their tools and AI to help understand the companies better. So we can understand their growth better and give tools back to the founders so that they can understand the growth better with the best possible charts and forecasts on their growth and where they're heading. We also then use the same data and AI engine to give to banks and investors so that they can also understand the companies better, which means that the banks can offer other types of financial products to the founders. Because thanks to the AI platform, they can understand companies better, and meaning that the risk is lower for them. So this means in the end that we can offer to founders growth intelligence tools, but also new modern data-driven growth financing. Thanks to our solution and the partnership with our banks, we can now do non-dilutive financing to companies that are in growth mode, are unprofitable, that typically would only have the option to go to VCs. But the problem is that they can't go to VCs because from the VC side, they need to have like hyper growth projections going forward, and that's not for every company.
Yeah.
So a lot of companies want to grow in a more sustainable way. Maybe their time is smaller. Maybe they want to stay profitable and don't take so much risk. And then it's hard for the VCs to accept them. So we created this alternative financing for the masses of founders that are building great companies, but doesn't really fit the VC model.
It's funny how we call it alternative, even though for hundreds of years this was actually the way to finance your business.
You're right. So this should be the primary way, and VCs is the alternative way.
Exactly. And so how did you even arrive at that?
No, so I came from, before doing this, I was working and building a VC fund, EQT Ventures, which was amazing. And we created a new data-driven VC fund. And so my background before this is that before that I came from Spotify, where I kind of discovered, we built the analytics team there, and we were early on like leveraging real big data sets, like every click, every event from every user. And we could see how much insights you can get if you do that well. So that's why we understood that if you really leverage that low-level data, you can understand how your customers are doing in detail. You can run lots of parallel tests. You can better forecast where the company is going. So much richer and granular understanding of the drivers of growth and what will happen into the future. So you have a much more accurate view of that. And that's what I brought with me to EQT when we started this fund, to both use the same kind of data-driven approach for the VC fund. So there are signals about companies everywhere. You know a company called Dealroom, right? You have a lot of data points there. So we wanted to collect all the data points out there as much as possible to be able to build signals and algorithms to identify which are the best companies that we should go out to right now that are probably best fit for us as a VC fund. So we did all of that, and then I helped the companies that we invested in also to try to get them to adopt this data-driven approach.
Right.
Build the infrastructure, work in the data-driven way to learn faster, and iterate faster, and grow faster, and avoid mistakes earlier. And then after having done that for 5.5 years, I saw these two things, that this way of working, everybody wants to do that, but it's hard to do it because you have to recruit people to, like engineers, to build the infrastructure, and then you need to adapt to this data-driven way of working. I just saw that it's a shame. We should have these platforms and tools should be available for founders earlier, because then we'll help more founders earlier to succeed with their missions earlier. They shouldn't have to recruit this big data team to do that. So we should just do that once and for all. And then I also saw that the capital that we could provide as VC if a good team that has cracked the unit metrics, if you can give them money, they can grow so much faster. We could see that from the VC model, right? But there are all these other companies that have also done that. They can't get access to the VC money. It's just a hinder for them to grow.
Yeah.
And it's just an opportunity. If someone would fund them, they would grow because it's already proven. But the banks can't do it because the banks look backward. They look at P&Ls for 5 years, they need profits, and preferably also like 5 buildings to security. And it's like, so where should they go? There is nowhere to find money, even though we know that it's proven. So that's when I realized that we should just build this platform. We should fix this once and for all. So that's when I left 4 years ago, because I saw this potential, if we do this well, that if we build this platform that founders can connect to, they get access to their own data and their own graphs and benchmarks and forecasts. They can grow faster just using that intelligence part. And then if we turn to the other side, if we give this the right tools to leverage this to banks and investors, they can then also create the next generation of their funding products, which means that even banks can actually fund the unbankable, the previously unbankable tech sector. And everyone wants to finance the tech sector. Everyone, it's really attractive. Like this, it's the future. Everyone wants that. It's just that their models are coming from the previous generation. So with this, we kind of level up that. And with the latest agentic things, it's just even more interesting, because now we can, in the latest version that we actually released this week, the investors can now use the platform to do the rest of the analysis. So if you think about an investment decision, it's one thing to analyze the quant data and the forecasting part that we did in the first phase, but to complement that, you also need to do like market analysis, team analysis, competitor analysis. You have to have a thesis of where the future is going, and all of that. That the deal team is doing in every investment decision. And that part is now also facilitated by the platform, thanks to this agentic approach. So you can, in this new tool, describe in detail your entire investment analysis tree. So you break down, I think we have like 100 different agents that are doing one part of the overall question for a company. Like one is looking into B2B contract terms. Another is looking into assessing the founder's background. Another one is looking into cohort analysis. So you kind of define in detail how every agent should do its work as a part of the overall tree, which is in the end, should we invest money or not? And that's a relief, because for the deal teams, that's what they try to do all the time. That's what we did before. But now the platform helps the deal teams to facilitate that. And the agents can then do a lot of the work as well. So basically right now, the platform helps to do like 70% of the memo that the deal teams are doing. It can produce itself. And then the teams add the 30%. And then actually the platform does another 50% of all the stuff that you never have time to do.
Yeah. Wouldn't it make sense for you then to somehow raise money and start deploying that debt funding yourselves instead of doing it for the banks?
Yeah, that's an interesting one. We actually started by doing that. But we believe the best position for how this should work, we want to build the platform in the middle, because if we do that, we can have like a lot of scalability in terms of building a platform that is truly valuable for founders to use on its own, like the intelligence part of it, and also a platform that is used by many different investors. If we get that right, we will have the ability to really focus on building the feature sets and the data models solely, and become really good experts into that. If we only do it ourselves, we would have to be so big. So I think it would be less impact, actually. So a much better model, we think, is to build this into a platform model where we can have a platform that supports many different investors, many different asset classes. And also it's the global scalability. This is universal. There are founders everywhere. The analysis is the same regardless of which country you're in. So and the capital is everywhere. There's so much capital out there. So it's much better for us to build the bridge between.
So what is your final business model then? So is it like a SaaS product?
Yeah. So we talked about this at the McKinsey panel yesterday. Actually, so we face the progression towards this vision, because you can't even if we believe and we will get to the big vision in the end, we can't start there before it exists. So we need to start somewhere. So in the beginning, the business model was to focus on the financing. So that's where we start. So we talk about come to us and you can get the growth loans because we can understand your data. And then we slowly build out the platform indirectly. Now we are moving to the next phase where we open up the platform to founders and investors to use on its own. And then that expands the business model to become a SaaS platform as well. And the funding we started to have on our own until we had track record to prove to other banks that this works, this new way of doing it, because that's how banks work. They need to see track record, which is good, I think. They're like risk averse, which they should be. But after 2 years, we had enough proof points to show them that, look, this is the history, this is how it's going, this is the monitoring, so you can feel confident about the risk levels here. And they said, yes, this is a good portfolio. We're going to take over this and continue on our own. So then we moved to the partner model. Right now we get a revenue share, you could say, from the financing side, from our partners, and now also a SaaS fee. And later down the line, when the platform also becomes even better for the founder side, we will also add premium features to that. Right now, it's free to use.
Does it also make sense to use for VCs, or is it mostly for
so it's
more like banks?
Actually any kind of financial institution. So we started with banks because that's the hardest one. No one has done it before. But also now, especially with the new agentic investment platform, it's any kind of investment decision, regardless of if it's a bank credit decision or if it's an equity investment decision.
It does seem to me that banks have been growing more and more interested in cracking into these high growth startup space. I had a conversation with someone from another bank in the Netherlands, and they are also using as much data by Dealroom as they can to assess these kind of things and find these businesses who actually make a good case for debt financing. Do you see this growth of interest yourself as well?
Absolutely. And when we started in 2021, we saw that that's not happening. So we saw this opportunity that at that time, the sentiment in the market was, it's VC, or if you don't have VC, it's something wrong with you.
Yeah, I remember that.
I remember even like when we built the Motherbrain signals that, if we saw that they had debt funding, I was like, red flag. We can't invest, because that means, we thought, that they have tried to get VC, but they couldn't get it. Shame on ourselves, because obviously that's not how you should see it. But that was kind of the sentiment then. But then when you start to think about it, it's not how it should be, right? So there should be a mix of asset classes depending on your risk level and how much you've proven. And that's what I think has changed now. And we thought that that's going to be our biggest challenge, to shift the market towards that. But I think the VC market during these years have also changed much. So now VCs are a lot of times also talking about like you need to be at profitability or very close to it. But when they speak language like that, then they sound more like banks, right? So so I think VCs need to focus on when it's not proven. They should fund big bets, high risk, high reward.
That's the entire.
That's what we need their asset class for.
Of course.
So if there is, if you have proven your underlying profitability, then you should be able to get other types of funding, unless you want to take more risk, right?
Yeah, of course.
So the way we see it is that if you've proven your underlying profitability, you can use the future profits from that to fund continuous growth. And with a loan like us, you can borrow on the future revenue stream, because we can see it. But if you want to go even faster beyond that, well, that's equity risk, and that's where the VCs should play. So together we have, like in the ecosystem, then different asset classes depending on how much you've proven and how much risk you want to take. That's how I think we should.
And what's your track record been like so far? How do you track the success of and accuracy of your predictions?
Yeah. So if you look at the actual pure forecasting part, where we forecast future revenues, I think that's around 90% accuracy in predicting 12 months revenue ahead of time, which is pretty nice. And then if you look at loan performance, we've done, I think, around 60, 70 loans somewhere around that. But still, so far, not any credit loss at all. So all these companies have performed well. And thanks to that, we're monitoring them as well during the duration of the loan. We can have conversations around when things are starting to look differently.
Yeah. Guys, your churn is not what it used to be.
Yeah, but it's not a bad thing. Like I talked to so many investors and banks, and they say, you know how it works for us? They say, we get information that the company has no cash left 2 weeks after it happened.
Yeah, no, that actually makes sense. Yeah, that's the normal interaction you would have with your bank. Yeah,
and then you try to like, how should we deal with this?
Yeah, yeah.
Versus our approach, where imagine you have our Spotify grade analytics infrastructure connected. We know everything. Together with the team, we have conversations around, hey, look at the cohorts here. You can see, well, the new cohorts are actually acting slightly different than the previous ones. Is this the start of a trend? Could be. So you see the forecast now starts to go down. So it's probably smart to like hold back on your investments a little bit until we figure this out. And then you kind of avoid future things from happening. That's how you should work.
Yeah, yeah.
That's how you can work when you have data. And thanks to the agentic platform, it covers not just the data, but also all other parts of the markets. It will understand new competitors coming up and market sentiments and everything else. So it's kind of always on monitoring of the entire case now.
Yeah. So data, and the importance thereof. So where does your data come from? So I understand, of course, the internal part. You connect to, I suppose, to all the tools that companies are using. And then what kind of external data do you look at in order to also assess the decision, but also the performance of the company?
Yeah. So then we work with. So the unique part is really the internal connected data, because that's the whole thing. That part, the first party data, hasn't really been used in an efficient way. And we do that by building the platform so it's like useful as an entire analytics stack for the founders. And by doing it that way, we can get the founders to connect to it and then leverage that. So that's really the unique part. And then the platform also allows to connect to whatever data source out there, which was what was new when I started Motherbrain in 2016. So all those kind of things where you connect to different data sets, and there's so many, right?
Yeah.
But only a few that are good, right?
Exactly.
No, but it's actually not a joke, right? It's very different quality for different data sets. So you have to be careful what you pick. But that part is important. And you usually have connections to a few different sets of data sets. Usually have a few big ones, and then you add on your specific exotic one that you have maybe acquired or scraped yourself to add. Like usually every investor has some kind of secret source or edge, something that they do differently, where they have a hypothesis. So we are really good at identifying specific founders that have done specific things, and we can track them in this way. And then they build a data set on that, and then they connect that. So I think the data set is like, you have to have the hygiene set there. That's key. Everyone has to have that. And then you also need to have something that is specific for something that you want to make differently than others.
Yeah. Can you give examples, like what are these like hygiene data sets, and what sort of these like extra data sets you might have?
Yeah, so the hygiene data sets are like basic information about companies, who are the investors, the team, funding rounds, but also more and more financials as well, especially if you're a bank.
Yeah.
So not just the top level numbers, but the reported annual report figures. So you get the basic picture of companies, and those databases exist, right? And you can connect to them. You can from that filter out pretty decently. Like this is the sweet spot of what we're targeting. But then you add on other things like signal data, like trends, performance data. So if you have data about traffic, web traffic, or app store traffic, or something that indicates this is something that is growing, or it has been growing and it's flattening, or it has been high and it's declining. So that's like the performance domain. And then it's the team aspect, which is harder because it's hard to get team data. You get usually the founders, the list of founders, but then to get more background on team is a little bit harder, but there are data sets on that as well that is using public data about teams. And then people add then other exotic data sets that I mentioned, and then they could be like, oh, we built a scraper to identify everyone that was in all these conferences, or we built a tracker that tracks what people likes on LinkedIn, and people that likes content around these topics. We want to tag them so they get another type of scoring. Or Motherbrain, we built this pretty interesting thing, which was we identified previous successful companies, and then who worked in leadership positions during that time.
Yeah.
They get like a tag on that, and then when they do something in the future, they get a higher score, like a specific growth star score. So that increases the probability of success for that team in that company. So you kind of link history together. So those could be some examples of what you could do, but there are many ones.
Yeah.
Like you can go to GitHub, you can create like Reddit scrapers. You know, there are many examples of what you can do.
And the fact that there are so many examples, and also the fact that there is now these agentic AI systems that allow to do it easier, for the way I understand. So is this becoming a commodity of sorts? Like, is this becoming something that everyone's going to be doing like within a few years?
Yes.
And like, how do you? So if it stops becoming like a USP, your moat in a way. So what do you do then?
Yeah. No, I think everyone. It will be like who is not using a spreadsheet to calculate their or to structure their analysis. Everyone is doing that, and I think that's going to be the same here, because the agentic systems allows you to do your work in a structured way, even though the structure is more complex.
Yeah.
And that's just amazing. What we see now, the performance of these platforms is just amazing when you're able to structure it like we do. But you need to have a platform that allows you to do that, to configure it, to kind of enter your code. It's almost like it's GitHub, right? You actually, in our system, when you have defined your tree of how you want your research to be done, you do it in a very detailed way. I mentioned the tree of 100 agents, and in every node, you write down specific instructions on what are the activities that should be done, and then what are the signals to look for, positive and negative, for that specific node. And then when you evolve this, you then say, oh, actually now I know, based on previous cases now, that I should split this into two again, and look at this in this way and this in this way. And then you continue to prune and evolve your tree. And that's not going to end. It's like building code for software, but now you're building code for investments. So you need to have a platform that allows you to do that. And as long as you have that, then and you work in a learning way, so you actually, in a structured way, try things, see what happens, see if it helps you to better separate the good ones from the bad ones, based on your own experience and your data, your cases that you have. And then you learn from that, you try new things and see if it helps. You're basically building software, but you're building an investment workflow as code in a similar way. Do you see what I mean?
Yeah, no, I think this is a very good way to put it. Yeah.
So you need to have something like that, and then as long as you have a platform that allows you to do that and you work in that way, then you will be successful. And I think it's going to be a commodity to use some platform, and then who has the platform to do that? Well, I know the answer, but but I can also say that the market's going to be huge, right? Because there is like every capital allocator will use a platform like this in the future. And I think what we also have that I haven't seen anyone else yet do is a platform that is specialized on doing this for investments, that's what we do now, and also the first-party data, because that's also hard to do. Like the building the analytics platform that is helpful on its own, that lets founders use it to actually understand their growth and soon also get access to this agentic power. Gives us the ability to have first-party data on the platform, and that's hard. And if you have that, you can do the agentic work much better. Like it's a 10, 20x improvement in terms of quality. And I think that we believe will also be table stakes, but that's hard. So I think there will be less players actually investing in building that.
I wonder if you can use this also on the level of LP, so actual like capital allocation on the LP level.
Yeah. I think so, definitely. You can do this approach is quite generic. Like everyone is talking agents, right? So it's. I think it's because it's the perfect conceptual idea of how to structure any kind of problem into an agentic workflow. It helps you to break down a complex process into specific steps.
Yeah.
So it's definitely applicable not just for venture investing or venture. Capital allocation. It's also from the level above for LPs as well.
Makes sense. Now, Henrik, thank you so much for taking the time and answering my questions, and good luck with everything you're doing at Gilion.
Well, thank you for having me. It was a great discussion.
Thanks a million.
Thank you.